and welcome. I'm Mamta Rawat from the Corporate Communications team of CareEdge. I welcome you to our discussion today on diamonds, naturals in distress, lab grown, marking its place. We sincerely appreciate your time in joining us for this webinar. We would like to welcome our esteemed guest speakers for today. Mr. Rajagopalan Kuravai, Non-Executive Director at Hari Krishna Exports Private Limited. Mr. Rahil Shah, Executive Director at Asian Star Company Limited. Mr. Smit Patel, Director at Greenlab Diamonds. This session will be moderated by Mr. Akhil Goyal, Director at CareEdge Ratings. We will commence this session with the presentation by Manohar Annappanavar, Associate Director, and Ujjwal Patel, Associate Director at CareEdge Ratings. This will be followed by a panel discussion and a Q&A session. In case of queries, participants are requested to key in your panel. We will take up your queries at the end of the discussion. Now, may I invite Ujjwal to make the presentation.
Thank you, Mamta, and I hope I'm clear. Good evening, everyone, and I welcome you all to our webinar. The diamond industry is going through a structural shift with a multi-year low of natural diamond exports and increase in the volume of lab-grown exports. With this thought, we had put our presentation to share a view on the sector. We'll be covering the presentation in three parts, where we'll first go through the natural diamond segment, wherein key developments across the diamond value chain and performance of key entities in the natural diamond sectors would be discussed. The second part would largely focus on key trade statistics of the evolving lab-grown diamond sector, and lastly on the rating dispersion and migration of the entities in this sector. The key messages that to follows is basically the natural diamond sectors at a macro level is showing a low consumer demand and consequent dip in prices, which has impacted the entire value chain and exports of natural diamonds. The EBITDA margins has contracted and it's expected to continue under pressure. And third, the favorable outcome is the discipline of the players, which has led to the improvement in leverage of the midstream entities, which we expect it will remain stable in the near term. In the lab-grown segment, India is developed as a global manufacturing hub, and it is overall production is expected to increase and with roughly around 12 million carats. However, profitability is expected to dip further as the industry moves towards a cost-plus model. With this key takeaways, I will start the discussion on natural diamonds. And taking a closer look at this key takeaways and starting, we see that there has been it's a different than any economic downturn which has been faced earlier, whether it is in Hong Kong-China crisis earlier or the US-China trade war, etc. So typically mines produced around 100 to 120 million carats, which Indian processors bought it under the existing contracts and exported polished through diamond bosses and retailers. And to mitigate the economic downturn, they extended elongated credit. The risk for Indian entities was largely in the form of collection perspectives. It was possible because diamond was still the most precious stone and alternate gemstone market was not that developed. So largely what has changed in the current economic downturn, it is largely we see the penetration of lab-grown diamonds, which is typically a gemological twin, which is optically, physically, and chemically the same as natural diamonds and available initially at 50 to 60% discount. Now the discounts are much higher. The downstream retailers now saw an option to natural diamonds, which has a tendency of improvement of their margins, and we have seen that. With good marketing of it being ethnically produced and being affordable, it resulted in good consumer demand and penetration in the US. Fast forward 2 years, and now retailers have got into a selective buying of natural diamonds, prefer to procure it on memo basis, and maintaining small focused inventories and purchasing only what they could sell. The cascading effect is there on the midstream segment, which have offered competitive pricing to liquidate the inventory they have on hand. It widened the gap between the rough and polished diamond prices and creating a pricing disparity. The domino effect cascaded to miners. They had to reduce supply, cancel sites, offered higher credit, offered options to midstream players, and at last they also reduced the prices. Nevertheless, they continue to the mining operations and because they have high operational cost and fixed overheads to meet. As production exceeded sales, the miner have also revised production targets, and they also sit on high inventory levels. This is largely the impact we can say because of penetration of lab-grown diamonds. And looking into detail, let's see how the current scenario has impacted the performance of miners. So overall production of rough diamonds, as reflected by the bar chart on the left, has reduced during last two financial years, CY22 and CY23. That is the lowest level of production since we have published data available. In case of De Beers, as reflected by the top hybrid chart on the right, its sales have halved from $6.6 billion to 3.3 and reported a marginal loss of EBITDA level of 1%. This was due to dip in sales by 23%, average price index by 20%, and increase in unit cost by 31%. In terms of production and sales, if you refer to the bottom line chart on the right, its production has exceeded supply for last 3 years. So even if we assume an zero inventory as on January 1, it still holds a surplus of 19 million carats as on December 31st of 2024, which is more than sales of its 18 million carats happened in CY of 24. So we feel that the minor De Beers will still continue to face a challenging year in CY25, and that would largely be true for other miners as well. Coming to the second element of downstream, global demand for diamond jewelry, as seen in the graph on the right, has been on a declining trend. The most notable change, however, herein, apart from the lab-grown diamonds, is the change in perception of investment value which Chinese hold. They started referring as the value being highly volatile, and this has prevented them from being as a long-term investment and have moved towards affinity towards gold. The decrease in demand from China has largely been offset by increase in demand from China, which although is the same trends at China, but we are seeing more penetration of organized retail, which has got a strong affinity for brands. The chart on the left reflects a global trend of polished diamonds, which mirrors the diamond jewelry trend. However, we feel that the large size loose diamonds, which holds an investment value, has been looked upon more favorably than the jewelry grade diamonds. Coming to the key segment of the presentation, and that is how the midstream segment has performed, which is often looked at upon as a price taker at both ends. So after robust growth and profitability in FY22, which had crossed already pre-COVID levels with an exports of $22 billion, its exports declined to lowest level in almost 15 to 20 years. However, it is expected to decline both in terms of value as well as volume terms in the current fiscal year of FY25. We'll discuss more with the panel members on how do we look at 26 and what are the revival parameters later on. The impacting factors are largely the same, whether it is lab growns or China or macroeconomic environment in key consuming nations. A key closer look at the import and exports. We have presented an indexed value with FY20 as in base year, which reflects that rough diamond imports followed the growth in polished diamond exports till FY23. In CY of 24 and 10 in FY of 24 and 10 months of FY25. In terms of volume, as reflected by graph on the left, the fall in exports was much higher than the dip in rough diamond exports, reflecting increase in procurement and inventory levels. That is largely under the committed obligations which the Indian entities have with miners. While Indian entities deferred purchases through voluntary ban, the resumption of operations in Q4 of FY24 led to increase in inventory levels and consequently exerted pressures. The value index graph on the right-hand side reflects widening gap between the value of rough imports and polished prices. So rough diamond imports increased significantly in Q4 FY21, immediately before the war commenced, and again after the war till first half of FY22, due to concerns of availability and at a higher unit cost. However, at the same time, immediately thereafter, we saw the decrease in polished diamond prices, which was pretty sharp. So on an overall basis, the index value has much higher than hindsight accumulation of inventory over the last 3 years. Let's see how when looking at how it impacted the performance of the Indian entities. We have combined the financial performance of key entities during last 5 years, and they account a significant portion of exports from India. So we see from the bar chart that total operating income grew significantly in FY22 and 23 following robust demand from key consuming nations. and the improvement in profitability was also reflected by the line chart, was also due to rise in polished diamond prices due to supply and due to increased demand vis-a-vis lower supply. However, the dip in profitability in FY24 and expected dip in FY25 has wiped out the supernormal profits earned by the entities. In terms of inventory, albeit marginal reduction, the entities still hold around 4 months of inventory, largely in lines with the pre-COVID levels. As per our estimates, the inventory levels continue to remain elevated, which exposes to their margins to volatility in these prices. Nevertheless, the commendable thing is largely the reduced in reliance on bank borrowings, which has led to improvement in leverage as reflected by the orange line in the graph. So in absolute terms, the overall borrowings of the sampled entities has reduced by 22% as on March 31st, 2024. This is largely because most of the diamond entities have started using their own funds to finance operations, relieving their dependency on bank loans. This was largely to maintain a liquidity and manage credit profiles better amidst fluctuating demand. So to sum it up, I would say that the current market trends hints at excess inventory levels, absorption of the same amongst the value chain remains very crucial. Consumer demand, on the other hand, is continued to remain impacted, and its revival is also remains to be seen amidst penetration of lab-grown diamonds. India, as I discussed earlier, has evolved as the second largest diamond jewelry consumer in the world with 11% share, and it's expected that it will continue to grow in the near to medium term. Our outlook largely depends on the factors, and we expect 13 to 15% reduction to around $14 billion exports in current financial year, and leverage profile is expected to remain stable. Nevertheless, the continued decline, because of continued decline and its eventual impact on profitability, our outlook remains negative. Revival key monitorables is revival in consumer demand, inventory management by the Indian entities, and adapt to changing market conditions. In our opinion, the overall relook or reinvention of the value chain would add a value for most of the entities in the entire value chain, because overall we expect the supply of rough diamonds to decline in a long term, and we also foresee the increase in value of natural diamonds as the LGD continues to decline. We will now look at the lab-grown diamond segment in detail from Manohar. Over to you, Manohar. Thanks.
Thanks, Ujjwal. Good evening, ladies and gentlemen. In this section, we will touch upon trade statistics of LGD from India, including the production consuming markets, LGD price trend with comparison to natural diamonds, and lastly on the outlook and key monitorables. Next slide. Yeah, move to the next slide. So you might have noticed lab-grown diamonds becoming more popular in jewelry stores nowadays. In recent years, the technology and processes to create these stones have evolved greatly. So unlike natural diamonds, which takes millions of years, LGDs are artificially produced in laboratory conditions in about 25 to 30 days, offering a more environmental friendly and ethical choice. The shift has been very quick. Just a few years before, lab-grown diamond accounted for only a small part of the diamond sales. Now they represent a significant portion of the market, which we will cover in the subsequent slides. So this rise is due to improvement in quality, led by significant strides in technology and affordability, making them a popular alternative to the natural diamonds. As far as technology is concerned, at present LGDs are produced using two technologies, that is CVD and HPHT. CVD is widely used in India and USA, while China uses HPHT. So let us look at supply side of LGD. No, previous slide only. Yeah. Unlike natural diamonds, which is oligopolistic in nature with a handful of miners, LGD manufacturing is well diversified and self-dependent. Data from Gems and Jewelry Trade Association of China showed that China accounted for about 45 to 50% of the global production capacity at about 20 million carats per year, making it one of the largest in the world. And India, led by large capacities in the recent past, LGD, I mean, India has emerged as a production hub for lab grown diamonds. For instance, there are about 80 odd companies presently operating in India in LGD space with about 6,000 to 8,000 machines. So having a capacity to produce about 170 to 220 carats per month per machine, translating into 16 million. So thereby, which large part of the capacity is coming on stream, it has become a global hub for manufacturing with a 16 million carats per annum. And US too has large LGD growing capacity. Whereas as far as the LGD consumption is concerned, akin to natural diamonds, like USA continues to account for a significant portion, approximately over 70% of the total LGD consumption. This includes the export routed through Hong Kong and China, thus emphasizing US position as a primary consuming market for lab-grown diamonds. The growing demand for LGD in USA as well as potential in the UK and Australia indicates a favorable market condition for lab-grown diamond exporters. Capitalizing on these opportunities, coupled with advancement in production technology and marketing strategies, India is poised to benefit from growth in LGD segment. The same is evident from growing volumes of LGD from India. Next slide, please. So you can see that we have in this in this chart we have shown how the quarterly LGD exports from India has been, which is largely a mirror of the consumption demand for LGD. So LGD export from India surpassed $1 billion in FY22 and have continued to remain strong till 23. The lifting of the lockdown restriction in USA and China had led to recovery in demand post that, resulting in exports surpassing pre-COVID levels. Robust demand from US market has been a primary driver of the increased exports. In addition to US, many European countries have also started buying lab-grown diamonds, indicating a growing market expansion beyond traditional regions. Although certain factors such as inflationary pressures, rising interest rates, and slower economic growth are weighing on demand for discretionary spending, especially in natural diamonds, however, LGD continues to remain strong, as is evident from a sharp increase in volume terms. However, in value terms, there has been a continuous decline in exports of LGD from India, mainly led by lower prices of LGD, which is a combination of both higher capacity and rationalization of abnormal profits. Next slide, please. Yeah. So in this slide, we try to capture how the LGD has performed compared to the natural diamond, both in terms of value and the volume. So the left-hand side chart shows the share of LGD in terms of value, and on the right-hand side, we have plotted how the share has been in terms of volume. So although in terms of value, the export remains at about 88%, in volume terms, the share of LGD has increased to about 38% in 8 months FY25, as against 8% in FY21, thus indicating increasing acceptance. So the penetration of LGD is primarily in the engagement rings earlier. Lately, it has been observed in bridal jewelry too. So going forward, increasing perception acceptance across geographies, export in terms of volume is expected to surpass natural diamonds in the near term. Next slide. Yeah, as far as the price is concerned, so there has been a significant shift in the pricing of diamond. Earlier, it used to be at a discount. Lately, it has been converging towards a cost plus approach. Just to give a perspective, LGD prices, which were at a discount of 67% in FY22, has increased to as high as about 86% discount in recent months. And in certain categories, the discount would range up to about 95%. The shift is mainly attributable to one, large capacity addition, innovation in technology, developing a better quality, shape, and size of LGD, which is very, very much akin to natural diamonds. So in view of the above, so one may get a question, so how far the discount would be? So what in our opinion, we believe that the downside is there. There could be some sort of a downside would be there on the price, but however, it remains limited given a very sharp fall in the prices in the recent months. Now, move to the next slide. Yeah. So on the back of increasing acceptability across geographies, higher penetration, increasing affordability as a result of sharp reduction in prices, the volume of LGD export is continue to show an upward trend and is expected to grow at least by about around 12 million carats by FY26. 1 minute. So now in this slide, we will see how the look at the key monitorable and trends. So some of the key trends in the recent would be like there are no major capacity expansion because most of the capacities which are already on stream. So there has been increased focus on awareness. So as you could have seen, like there are a lot of initiatives by even the larger players also with regards to increasing the awareness of and understanding of the LGD. And also we have witnessed some of the players earmarking their part of the capacity or the resources utilization such as labor and infrastructure to LGD. And also as far as outlook is concerned, we expect with the increasing affordability, acceptability, the volume is expected to continue to grow at about 20%, crossing about 12 million carats per year. And the margins are expected to see some moderation, although downside remains limited. Overall outlook for the LG players remain largely stable. And the key monitorables are includes increasing penetration of colored LGD into the fashion segment is one of the important aspect. And the second is the acceptability of LGD as a diverse segment would be one of the major point to be monitored. Yeah, next slide. Yes. Now move to the next slide. Yeah, sure. Move to the next slide. Yeah. So in this section, let us see how the rating universe of all the, rated by all the rating agencies have performed, especially in the diamond segment. The chart indicates that you can see like a large part of the, ratings of diamond players have been trending towards below investment grade category over last 3 years, while the players in the A band category has largely remained stable, which is in line with the export trends which we have seen in natural and LGDs. Yeah, next slide, please. The same is also re-emphasized with credit ratio continue to remain below unity, indicating more downgrades than upgrades, which is in line with the recent fall in the exports of natural diamonds. Now I hand over to Mamta Rawat.
Thank you, Manohar and Ujjwal. Attendees are requested to key in their questions, which we will take up after our panel discussion. Now, may I invite Akhil Goyal to take over the session, please. Akhil is the Director of Corporate Ratings at CareEdge Ratings, with an extensive tenure of 15 years at the organization. During his career, he has been part of the various verticals of the ratings division and has spearheaded the development of various products. Mr. Goyal has managed portfolios for companies across a diverse range of industries, including cut and polished diamonds, pharmaceuticals, capital goods, textiles, and chemicals. He holds an MBA in finance. Over to you, Akhil.
Thank you, Mamta. Good evening and warm welcome to everyone. First, I would like to extend my gratitude to Ujjwal and Manohar for their insightful presentation. I am honored to introduce our distinguished panelists who have graciously taken the time to join us today to share their views. Our first panelist is Mr. Rajagopalan Kuravai. He is a non-executive director at Hare Krishna Exports Private Limited. Mr. Rajagopalan holds MSc Physics and Certified Association of Indian Institute of Bankers degree. He has 3 decades of experience in the banking industry. He has retired from SBI as DGM of the Diamond branch in 2006, post which he joined Hare Krishna Group in 2007 as an advisor to management and became non-executive director on 1st October 2012. And since then, he has been providing financial advice to the group. Good evening, Mr. Rajagopalan. Welcome to our webinar. Our next panelist is Mr. Rahil Shah. He's a whole-time director at Asian Star Company Limited. He represents the 3rd generation of the Shah family leadership. His deep expertise in diamond procurement and manufacturing has been instrumental in modernizing the company's operation. Our technology-savvy leader, Mr. Rahil, has seamlessly integrated advanced systems, enhancing both efficiency and transparency across the diamond value supply chain. Alongside global initiatives, he also contributed towards the domestic jewelry segment, reinforcing the company presence in India's jewelry landscape. In recognition of his contribution, Rahil was honored. Mr. Rahil was honored with the prestigious 40 under 40 award by GJPEPC in 2023, acknowledging him as one of the India's most promising emerging leaders. Good evening, Mr. Shah, and welcome to our webinar.
Thank you, Akhil, for having me here.
Thank you. Our third panelist for today is Mr. Smit Patel. He is a director at Greenlab Diamonds, which is the one of the growers of lab-grown diamonds. Holding a degree in global business management from Regent's University, Mr. Patel is an esteemed panel member of the lab-grown diamond sector of the prestigious GJ EPC. As a third-generation diamandaire, Mr. Patel comes from a family with a rich history in the diamond manufacturing and exporting, spanning over 50 years. He leads the Greenlab research and development, sales, marketing, public relations, organization management, and the value systems. Mr. Smith is also spearheading the jewelry division of the company, Greenlab Jewel Private Limited. Good evening, Mr. Smith, and welcome to our webinar.
Thank you so much, Akhil.
It's a time to quickly set the context before we begin the panel discussion. As seen in the presentation, natural diamond is going through a rough phase with CPD exports from India hitting 15-year low amidst lower demand, macroeconomic challenges, and the volume growth of the lab-grown diamonds. The players and also in the industry also witnessed the decline in scale and profitability, but has shown resilience with lower lines on external debt. With this, let's hear from our esteemed panelists today about their views on the industry. To start with, let me go to Mr. Rajagopalan. Sir, with the CPD exports showing downward trend, how do you see the recovery in natural space going forward?
Yes, CPD exports are going down. There are some bright stars in the horizon, we may say. The recent Hong Kong show has shown some hopes for the diamond people. They say that the recycling of diamonds that was taking place in the China, that has almost stopped. And the people, the Chinese people are showing more interest in buying, even though that has not resulted into any, tangible deals. The industry is hopeful that it will convert itself into some positive sales. That is one nice thing to look into. So there is something there available for these people. And second is the stagnation of the lab diamonds production. Smit Patel will be able to throw more light on this than I do. But there is no increase in capacity. People are not using even the existing capacities fully because the margins are very low. With lower margins, they would not like to produce more and more. And there is lack of interest in these retailers also to keep the diamond jewelry made of, lab diamonds. Because if the margin is more, they can keep it on the shelves for a longer time. Since the margin is lower, the interest is waning. So there is a sort of a stagnation that is being experienced. So this stagnation, they say that, okay, it has the lab diamonds have reached a plateau. So that will give rise to, the natural diamonds being preferred as a choice for all these people who are buying diamonds or who are buying jewelry. And there is another school of thought also. When I was discussing with people, they are telling, sir, there is no competition between natural diamonds and real diamonds at all, they are telling. So this is because of the present state of the world economy. that people are looking for, an affordable choice for buying. So as of now, with this lesser money in the hands of people, the affordable choice is lab diamonds. But it is certainly going to change, and there will be a better, future for these things. Only thing is we have to maintain a little bit of patience and keep observing and do what we can do for this. And third, of course, is a change in the US government. What it is going to do in terms of import duty is one big question mark. But of course, even if the import duty is levied by, the US government, they say that there are ways and means of tackling this. We will be able to tackle this. So that's not a problem. That is what people are telling. So overall, yes, decline in the sales can be arrested. That is my viewpoint. Decline in the sales of the polished diamonds can be arrested. The decline will not be there any further. But will there be an improvement? Will there be an increase in sales? Only time can tell on this. But I am sure that people will be happy. About pricing wise, will there be an improvement? I'm not very sure about it, because until now people are used to a particular level of pricing for diamonds. So there may not be that much of a pressure on these people to buy, so that we are in a position to dictate terms and sell at a higher price. I am not very sure whether that is possible or not. But the point is, a decline in sales certainly in the coming months will be arrested, and we may not be able to show much increase in sales, but certainly the year 2025-26 will turn out to be a year where there is no, there is no decline. There is no percentage decline in the amount of the quantity of materials that are being sold. That is, of course, my personal viewpoint.
Okay, sir. Right, sir. So as you said, with the decline can be arrested because of the improving macroeconomic condition, the lab-grown diamond reaching its peak, and also because of the pricing being indifferent as far as the price elasticity is concerned. With that, I will ask Mr. Rahil Shah the same question. How do he see the recovery in demand going forward? And additionally, do we see any demand coming from China going forward?
Thank you, Akhil, Bhai, for your question. Firstly, thank you for having me at this webinar, and it's a great opportunity to dwell and introspect into our industry as a whole. I think my view is very much on line with what Mr. Rajagopalan ji just mentioned. I think I'll just add on to that because he has summed it up quite well. I would like to say that yes, the industry has gone through a lot of whirlwinds or a lot of changing dynamics over the last 18 months. However, we cannot forget the fact that we saw an extreme peak just 2 years back in the natural diamond space. This is just more of a, I would say, somewhere of a reality check for our industry and somewhere for us to maintain prudency moving forward, which I think a lot of the industry has already started to implement over the last 18 months already, where miners have supported the midstream in the best way they could by giving flexibilities, by offering import freezes. More than anything else, I think even the rough diamond manufacturers have been very disciplined with regards to curtailing productions and focusing on EBITDA, focusing on margins instead. Because yes, of course, everybody has expenses and it's important to keep that in check. While we are seeing this sort of a downtrend that we are having an effect because of the lab grown as well as the geopolitical and economical situations globally. If you ask me specifically region-wise, I see that China, of course, has had a very rough last 3 years from an economic standpoint, and I don't see it recovering immediately. I do see it taking some more time for the economy to revive back to its original levels, but it is going to happen. It is. Let's not forget that it is one of the largest consuming markets of the world at the end of the day. So I do feel there will be a recovery, and when it will happen, I think it will be in benefit to both the lab grown as well as the natural diamond players. Um, when it comes to compensating for that demand that has been foregone, I think that India has played a very critical role with regards to taking on a lot of that demand. The last 2 years, I think, has been a boon in disguise for our domestic market. The government supporting the economy with its policies and consumer spending happening on the ground as well can clearly see that jewelry, and as an industry, I think we have thrived. Most of the large retailers are yet focused on the natural diamond space, which is amazing to see. I think lab grown does provide a beautiful platform for awareness about the concept of a diamond in general. I feel like it is going to be the stepping stone for more awareness to those people who never even thought that they could probably afford a diamond in their lives. And it is a beautiful proposition. I do feel like it's going to make its own mark, but natural diamonds are always going to exist at the end of the day. Yes, the US has seen a lot of acceptance as a very mature market. It has taken lab-grown diamonds very organically, but as Mr. Rajagopalan ji also mentioned, and your data also shows that very clearly, there is a concern of downward trending prices in lab grown, and that is sort of diminishing the retaining value of the lab grown itself. So that is of course a concerning part, and I feel like that is where naturals will shine. As even though there has been a correction in prices, the retaining of value, and there will be a comeback of confidence with it being a store of value in the long term. But yes, in the short term, we are going to see some more unfavorable winds, if I may put it in that manner. Um, and yeah, I think as an industry, we got to make sure that the marketing happens in the right way and the awareness of both the products are made very clearly in front of the consumers, so that there is a very transparent, value proposition for consumers to decide for. Thank you.
Thank you, Rahil. So I think Mr. Rahil has made a clear point that we have seen the peak of the diamond. Now it is going through the tough time, but going forward, there is a future that we see with the demand coming in. Even China cannot be ruled out yet. It is yet to show any signs of revival, but it cannot be ruled out. And yes, in the jewelry demand, domestic jewelry is what we have seen the green sprout also when we have looked at the domestic demand. So India has become the second largest diamond consuming market after China decline. So definitely that is one thing that we will keep on monitoring. Thank you, sir. Thank you. Coming to Mr. Smith. Sir, next I would like to ask you, how do you see the potential of LGD going forward? And as other panelists also pointed out in terms of price. So how do you see, because we have seen in terms of volume, it growing 58% in last 2 years. But going forward, how do you see that?
Correct. So I think around 3 years ago, the export was around 4.5 million. Then it was 7. And now in 2 quarters, it was around 9. With the prices correcting, of course, the figures are clearly shown, like the average carat prices also declined a lot. I call it correcting because we knew, I would like to, from your presentation, just take a few points. The technology hasn't massively, of course, we've made it a little more efficient, but hasn't massively reduced the price. Like you've mentioned, it was like unbelievable EBITDAs, unrealistic figures, and basically no monopoly. So the day we started lab-grown diamonds around 5 years ago, 6 years ago, we knew what the prices would come down to. And I'm not saying all of them are there yet, but there is a high chance that the sharp decline cannot happen, because they won't be able to survive. So people who understand the value chain of this businesses know how to make their products more efficient, from the growing to the cutting, polishing to the jewelry setting. And that's the stage we are at right now. So the people who are shutting down their machines are people who never were in the diamond industry. Most of them, they didn't understand the value chain of this business, what goods to make. I can grow everything above 10 carats, but should I? That's the question. Understanding the economics of this business was not as simple as people thought. But when the margins were so high, mistakes were allowed. Now it's actually even more fun to be in this industry. Why would I say that? Is now the because it is such a tight margin, or because the prices have declined or corrected itself, the people who enter this business understand it. They are taking all the right steps to make sure that this business stays for a long period of time. Uh, they are having long-term relations with their clients. They know what programs to run, when do they run it. So it's making the industry a lot more healthier. Now, speaking about natural diamonds, I know, like I really hope both the industries really grow, because it is kind of, it has to work hand in hand. I've always spoken positively for, even when the rough prices, I think in the last tender increased by 10-15%. I was glad to see that there is some positive signs in this industry as well. So hopefully that is trickled down. Um, but lab grown diamond, yes, in America, from 30% to 85% retailers now keeping lab grown diamonds in their shelf and marketing it very transparently. That's something to learn from. They are very clear about what they keep. They keep both natural and lab-grown diamonds, and they're very transparent to the consumers. In the end, the consumers decide what they want according to how they want to perceive it. So, speaking about, why I see this industry still has a lot of potential. I am increasing my machines as we speak today as well, and I see the potential because the number of carrots that are exported are still not as much as natural, and the prices are, I would say, like what, 1/10.
Yes.
So I
Almost
see,
like that, yes.
yeah, I see the prices. I see the potential of carrotage actually increasing, because with that logic, when more people can have access to it because of the pricing, I think the quantity should surpass it. Of course, we are always in a little bit of transition phase. We are speaking to a few companies in Europe who are very positive of introducing both. So they're just going to give an option, like one of the largest retailers, they're giving an option of lab grown and uh, natural in the same website, and I see that happening a lot around the world. India, there are a lot of, I think there's going to be a spiral effect, because there are a lot of mom and pop stores coming up, people who are trying to test the waters out by, because the barrier to entry is less in opening a lab grown retail store than a natural retail store. So we are seeing a lot of new companies coming up. Of course, there'll be mistakes made. There will be some people who don't understand the retail space trying to enter this as well. But I think that will correct itself, and I'm sure there'll be a few companies that are going to do really well. And once the consumers, because retailers are the biggest marketeers for the product itself. We haven't done any kind of mass marketing of such sorts. There is no association who's doing spending a lot of money in marketing or education. So the retailers are ones who convey the messages. And I think more and more retailers around India are coming up with only lab-grown stores. So I think the consumers will get a little bit more awareness in the coming years. And because we stay in this bubble, but we know that so many people still don't know what a lab-grown diamond is. And these retailers coming in is going to change that perception for sure.
Yes. One follow-up question to Mr. Smith. In terms of growth, when we say ki it has a huge potential, do you see it eating into the wallet share of natural diamond or growing as a separate segment? As you have said, ki now people are more transparent to their customers. Even the new stores that are going to open, that they are exclusive lab-grown stores are opening up. So, do you see it growing as a separate segment or eating into wallet share of natural?
There's a two-part answer. I wish it has its own standing. I wish it grows separately, but I do believe that it's but natural that people are going to be eaten, because we have decorated a lot of brides in India also. We knew they could have easily bought natural diamonds, but they were more than happy to buy. So like those kind of examples don't allow me to believe that sentence anymore. But however, I really hope that it both grows together, because it just makes the competition healthy. I think a lot of even natural diamond cutting and polishing, they entered lab grown diamonds just because you know, just because they wanted to get an alternative and not stop their factory. That actually makes this business a little unhealthy as well. So I'm very glad that if the natural segment and the lab grown both grow, we won't have to do this to each other's industry.
Okay, thank you, Mr. Smith. I think you have made a very valuable point in terms of natural and lab grown have to have some kind of cannibalization, but yes, it will also have its own marketing right away. Coming back to Mr. Rajagopalan, I would like to ask you, in terms of prices, we have seen in the natural space also the prices have corrected, especially in the higher carats. But miners are being very cautious in terms of reducing the prices. They have kept same or a little bit on higher side. Going forward, how do you see this price moving forward from the miners and from polished natural prices?
Tug will remain because it is the market that will decide at what price polished diamonds are being sold.
Hmm.
That will in turn decide at what price I am going to buy my diamonds. Earlier, they were procuring, whatever DTC was offering, whatever, Russia was offering, whoever is manufacturing, they were just taking it without even bothering about if I am having a rough, they thought that the life is made. That was the original earlier state. Now nobody does it. Whatever diamonds roughs are being offered, whether these roughs I can manufacture and what will I get out of it, how much of it I can sell. So all these equations get into this. So DTC is also very much aware of this because they can't just foist their diamonds on the diamond cutters because they should have something to they should have something with them in order to produce and sell. Otherwise, why should they buy? So this tendency is coming. So the maneuverability of the buyers, I find, is very much limited as of today's date. When this tug of war will revive, people will be telling, I am not taking the goods. And they will be telling, if you are not taking the goods, I will not supply later. So some sort of things go on. But ultimately, the miners will realize that they have to conform to the market. So I think some sort of a change in the equations between the buyers and sellers will take place as time passes by. Now also it is taking place, it will stabilize more and more.
Right. And we have also seen the voluntary ban imposed by the players in the India in terms of purchasing goods,
Yes,
even
once they said
uh,
they will not, yes, they will
yes,
not buy. So they realize that they can't dictate terms because there will be other buyers. No? Where are the other buyers? So they have to.
correct. Right.
And another thing is, on the one side, they want to sell the goods they are buying. On the other side, the availability of the jewelry quality roughs also is going to come down as by years pass by. So that will introduce a different type of equation, a factor into these entire equations. So only time will tell with regard to that how much the bargaining capacity of the miners is going to increase on account of the reducing availability of roughs. These are all very difficult to say, but I have a feeling that it is the cutters who will be more as time passes by, they will be dictating the terms, the market developing the fashion in which it
Yes.
is. So how long will it take for India also? This is only an out of the box thinking I am doing. How long it will take for the Indian buyers also, the people also to realize that, okay, why should I go in for, natural diamonds? It's as good, lab diamonds is as good. So, when the price difference is so much, all sorts of things will come into play. So people have to adjust themselves to all these things. So I have a feeling that the dynamics will change. There is an effort being made by all the people to keep that, the changes are reduced to the minimum. How much they are successful in this or this, on that only the future will depend.
Right. Yeah. Taking it forward, so Mr. Rahil, I would like to ask you, in terms of smaller or larger carat, where do you see the price correction happening? I think in past we have seen smaller getting lesser affected, but 24 is the year when smaller also got affected in terms of pricing. So two things. First, how do you see the prices going forward for larger and smaller separately? Secondly, in terms of lab grown, where do you see the major impact of the same?
Okay. So let me start with the breakup between the sizes, I think it's a very important question to address. Yes, I think until last year, I think the top of the town was more about the larger sizes, the 1 carat plus larger sizes diamonds that took more of a price correction because of the impact of, especially the impact of lab grown. And of course, in the last, I think 9 months or so, we've been hearing a lot about HPHT smalls also entering into the market. Now, one very critical aspect I think that does need to be taken into consideration is the labor cost. Because labor cost is going to play a very critical role as to how small diamonds in the HPHT, the cutting and the polishing is exactly the same at the end of the day. The processes are the same. So, is it sustainable for a person to manufacture at that labor cost versus manufacturing a larger sized 1 carat plus polished lab grown stone? So yes, to answer the question directly, there has been a price correction that has happened in the smalls across the last 12 months. But to be very honest, I feel like it was more to do with polish inventory buildup in the. I mean, even your figures clearly indicate the buildup of polish inventory, and I think somewhere in the last 6 months, because of the prudency that I spoke about earlier, and I spoke about how people are being more disciplined in purchasing natural rough, and the mining companies being flexible, and even clearly their figures, you can see very clearly they've been trying to sell less and less onto the market. They're not, forcing their partners or their midstream partners to purchase more rough. It has given a lot of breathing space with regards to clearing out inventory. Moving forward, I do feel that this inventory level has already started to come down in a big way. And I would say this for both the larger sizes and the smalls as well. And inventory itself will be the first point wherein which the stability of natural diamond pricing will arrive at. And I do see very clearly it has started, but consistency is key to make sure that this continues and this stability continues. Midstream has to focus on dollar per carat, on how do we increase that dollar per carat in polish. And that cannot happen if one spike in 1 month dictates polish demand. We need to understand from our retailers what is selling. We need to understand from our jewelry retailers and loose diamond customers what exactly is it that they are looking for. We are already, in fact, seeing in some areas in the smalls where prices have not only stabilized, but even availability of fresh goods is becoming challenging. So I would say that that's a good first sign from a recovery curve, but we have a long way to go, that being said. I think that's where I stand with regards to the sizes. Moving forward, I do feel that there is going to be, as I said, some more whirlwinds, but depending on the trade policies, depending on economic situation, geopolitical tensions, all of these things will play a key role in the next 6 months. Interest rates, another key factor, inflation, another key factor. All these points are gold prices. So there are so many elements. It's not only lab grown that has directly affected demand. It is also these other factors. Sometimes when things are bad, we tend to over exaggerate the bad. And we forget to look at it from a Hawkeye perspective and see the globe as a whole and see the situation of the globe as a whole. So, yeah, but I do feel like there is definitely stability coming into the natural diamond space. And I think I'm quite positive moving forward into 2025, cautiously, very cautiously optimistic.
Thank you, Mr. Rahil. Coming to Mr. Smith. So in terms of lab grown, as you're saying, now they are moving towards cost plus basis, and we already knew this prices are going to come down. Do you see any further scope of reduction in the prices by rationalizing the cost, say power, which is one of the major component?
No, honestly, in the majority of categories, I don't. Yeah, there will be a few stones, especially in the very large side, where it will happen because we are still enjoying a little bit more margin out there. But in the smaller goods, like Rahil bhai also mentioned that labor and everything is also a very important part. And we are very close to it. Of course, some people without cost calculations might do some deals, but it's not a long-term solution. The reason of my expanding is also that we've just taken over a company that couldn't manage the cash flow properly, or and it's not like the demand wasn't there, but they couldn't manage all these because they didn't understand the cost calculations of certain products. So we got the opportunity to take over the entire company. Now, the reason we why I'm mentioning this is because there is still space to grow. However, the prices cannot, practically really go down a lot.
Okay. Okay. And in terms of newer market, do you see LGD US? It is already have a higher acceptance ratio, but in terms of other market, how do you see in terms of
Definitely. So we've also been part of the Hong Kong show recently, and there have been some very positive signs and deals for us. So that's very positive. Again, in the Middle East, also there are some retail exhibitions which are doing very well. Previously, Labdrone wasn't allowed to display, and now they have opened it up, and I've heard good results have come out through that. So we are seeing signs of improvement in the markets of rest of the world other than the US. So after US, it was I think Middle East, and then after the Middle East, it's I think Europe. It's going to be third, and India, of course, like I've mentioned earlier, there are many retail stores. Almost, I'm meeting at least one a week or two a week. It's that prominent in the whole of India that they're coming up with new stores, and these are very serious, planned people who are entering the space because of their viability.
Right. So Dubai, Middle East, Europe, and India is the major market where this penetration could further increase.
Definitely, yes.
Okay. Thank you. Now, before moving to audience question, let me take a quick feedback from all three of us. In terms of inventory trend, do you see any stress building up further? So I will start Mr. Rahil, then we move to Rajagopalan, then Smit.
So as I was mentioning that, inventory is key aspect of deciding the price and the new stability and the new benchmark for pricing. I do feel like somewhere we are coming towards the end of the cycle of this price correction, because it's the fact of the matter is that the industry has consolidated already. We have seen, even as Smith mentioned, that we're seeing so many cutters from the natural diamond space go back and forth with regards to manufacturing for lab grown, perhaps just temporarily. At the end of the day, the fact of the matter is that I think people have started to now see and focus on bottom line, because that is what eventually what everyone's working hard for. So it's not only focusing on turnover and not only focusing on sales at the cost of the bottom line. So as that becomes focused, I feel people will be, and manufacturers like ourselves will become even more prudent, even more conservative, especially when we're entering into 2025. As I said, very cautiously optimistic that we have, hopefully bottomed out on those pricing, and we should focus on how do we improve that pricing from a marketing standpoint, from making it again a more accessible and in fact an opportunity for customers to purchase at this new price point that they're going to get at a very good value. And I think that we're hopefully at the bottom now of the price correction, and inventories are, as I said, in a lot of different categories, I think are bottoming out. And I can say that for most of my peers as well. Everyone has been so disciplined, but as I said, consistency is key. That is where sometimes our industry goes a bit off track. So I'm hoping that moving forward, we learn from the mistakes of the past, and we don't repeat history, and we focus on making sure that the diamond dream exists forever for both lab and for natural, I would say. Yeah.
Okay. Yes. Mr. Rajagopalan, sir, over to you, sir.
Yes, higher inventory has been a concern for the past 2-3 years. As Rahil Bhai said, there has been some mistakes made by the people in the past, which they are trying to correct, and And another thing is normal tendency is not to sell at a very low price. So they are holding, but there is a limit to holding also.
Yes.
So I have a feeling, going by when I observe, as I observe things, I have a feeling that this year end will witness considerably lower inventory levels. And as a end result of that, there will be a lower profitability also the industry will be witnessing. This is what this is what my guess is. So by March end, when we take out, we'll find that the industry's profitability has come down, but the industry's inventory level also has come down because people are interested. Nobody wants to hold it.
Yes.
Inventory just for the sake of holding. And yeah, of course, greed plays an important part. I would not like to sell at a lower price. I have manufactured this, a cost was included in this. Why should I lose money? So it will remain for some time, and afterwards, when the reality strikes, people will have to do something about it. So I have a feeling that this year end, people will be bringing down their inventories, and the result will be the lower profitability. This is my guess.
So we could see some inventory correction further happening by the March end.
Yes,
Uh,
yes.
Coming to Mr. Smith, so in terms of lab grown, because it is still in a growth phase, so two things. First, do you see any inventory built up happening? Secondly, because we also import rough lab grown from other markets. So any viewpoint on that side?
So yeah, most of the rough that we import are HPHT, and yeah, there are a few big companies of CVD as well in America, but those are the main two import points of rough. In terms of inventory buildup, personally, we haven't seen any kind of increase in the ratios we maintain. The good thing is if you're well planned from the growing stage, that's very important. Your ERP, it helps you really understand what stock you require for what season. And I think that's a strength of company to company. I won't speak from the industry point of view, but yeah, there have been built up. So some people who are like Rahil also mentioned, jumping around and trying to cut and polish both because they didn't have rough maybe at that point and they wanted to keep their factory operational. Either they hold it or they dump it. So that is there. However, as an industry, the carriage is like you said also increasing right every year, and we see that happening even further. So until unless you have really grown something, the same type of rough, I don't see the reason why inventory build up. Because if you're planned, that's the strength of this industry.
Thank you. I think let's move to the Q&A. So first question from the audience is the potential impact of Trump imposing duties on Indian exports of LGD and natural diamonds. So can you take, Mr. Rahil, can you take this question?
So, see, of course, everybody's keenly waiting and observing what happens on April 2nd. But it's very important to see the fine print, and we can't get ahead of ourselves. We need to make sure that I think there is a lot of chatter in the background, a lot of conversations, a lot of discussions between both the countries that is happening at a bilateral level to try and see how we can work together and try and bring down the or rather mitigate this potential risk of higher tariffs coming into India. But if you ask me if it does come in, and I think our industry is very resilient. As even Mr. Rajagopalan mentioned, I'm sure we will adapt and we will find a way to figure out how to do it. But yes, the immediate impact will be there. We can't run away from it. So there is going to be an added cost probably attached to it. So we got to be very mindful on what is to be done. And yeah, I would just like to say that we have to wait and watch. It's not something that you should get overwhelmed by because that's not going to help. Just got to wait and watch and potentially take the challenge up when it arrives.
All right. Yeah, but it is wait and watch situation. But yes, as you rightly said, ki there would be an impact because if we see in terms of duty structure, so from import from USA, there is a higher duty structure as compared to what USA is charging to us. So if there is a price impact, obviously the price of export would rise, and that could have a bearing in terms of demand over there. In past, we have seen that jewelry demand being getting impacted because of some change in the duty structure. However, having said that, in terms of price elasticity, diamond is being inelastic. So let's see how much impact could be there and what could be the rate that we are looking at.
Absolutely.
Right. Coming to the next question, I think this is one question Rahil ji also answered in terms of demand from US and China as vis-a-vis Indian. So, Mr. Rajgopalan, can you take the bet? Do you see that India becoming a larger demand compared to larger share in the diamond consuming compared to China, much higher than what it is presently is?
I don't think so. I
Okay.
don't think so. There is a limitation of these of Indians consuming diamonds. The way in which the Americans consume, I don't think Indians will be able to do it. But yes, but in most of the places, people want working women's jewelry is very popular. People are buying. They would like to have either a diamond nose screw or a diamond earring or a small piece of diamond in that pendant, not a 1 carat or 50 cent wala. Maybe a small piece they would like to have. So smaller jewelry quality diamonds which are below 10 cents, 20 cents, they will become popular in India. The consumption was there in the past, it continues to be there now also. And the companies like ours, like Krishna, who is trying to popularize diamond and is open, several stores we are trying to open. We have so far opened around 70, 75 franchisee stores we have opened. So there will be increase in sales by similar efforts by these people. But higher, this higher size, 1 carat, 2 carats, 3 carats, still we have to look to countries like America, Hong Kong, or China to buy. This is my personal view, of course, because the habits of these people in India, yes, people at the higher level may be looking at it. And most of the people, I don't think they buy diamond for as a store of value or something, where for investment.
Right.
For investment in our country, the tendency is to buy gold, not a diamond. So that habit, I don't think it will change. And another thing, in our country, we don't promote, consumption of luxury goods to a larger extent. The way in which the government is moving also, they don't promote consumption of luxury goods, especially if the consumption of luxury goods increases beyond a level which government feels that it's not okay, they will interfere into this. So that will put its own. As of now, people are not bothering much about diamond because it produces a lot of employment. The employment value that is there is only holding the government from putting any imposition on consumption of diamond in the country. But I don't know what will be the balancing scale where they will put a line. I am not very sure. I don't know. What are the parameters on which you have to decide. I am not sure. But if it increases, if more and more diamonds are being sold, certainly the government would not like an unwanted, unnecessary input, which is not contributing to any productive value. So that idea may come in, according to me. So that there is certainly a restriction on, there are impediments for the growth of diamond sale in India. Up to a level only it can grow. Beyond that, it cannot grow. But I see a lot of opportunities for the lab grown diamonds in that area because it is being manufactured it is being sold at a very low level. So people would prefer, a time will come, I have a feeling that this lab grown diamonds prices will be equal to the diamonds of zirconium. Then in that case, you will find that going very high. Of course, these are all, what I say. I am just thinking aloud, that's all. I mean, there is no basis for this. I do not have any data to show that this is what it is. But these are some of the guesses or ideas which I think will be there. But I have a feeling certainly that there is a restriction on the growth of diamond. We have not reached that level. When we reach that level, government will interfere.
Okay. So Indian demand, yes, it has a potential, but there is a restriction because the overall mentality of the luxury good and the diamond as a store value. Store value. Okay. Yeah. One more coming to the audience question. So the question is on the certification of lab grown diamond. So the trend is that the lab grown they want to know about the trend of lab grown certification, and with the pricing falling, do we see artificial diamond like cubic zirconia or mostery will necessitate need of certification, especially for the LGD jewelry? So, Mr. Smith, can you take this question?
Yeah, it's a very good question because people do question the certification requirements, especially when the prices are so low. But I think it's a part of the experience and the trust. It's not because it's lab grown you don't need a certificate. The jewelers still want to present the certificates to the consumer as an experience. They build trust. And I think the reason, like I'm saying this, is we have spoken to a few retailers who we have discussed very clearly. Why are you certifying? Like, it's my goods. We have grown. We have cut it. We have polished it. We are giving you our internal certificate. But I think it's more about the trust these companies have built with the consumers, where and also becomes a part of the experience where whoever buys even a small piece of lab-grown diamond jewelry, they would want a certificate just reaffirming them what they have bought. And I think that mentality is not going away soon, because not all people even know about it yet. So I think once we reach that stage of maturity, we might have a different conversation. But for now, certifications are an important part of the process.
Okay. Regarding that certification only, the follow-up question is whether the certification would be issued by the grower or it would be by the retailer. How do we see going forward?
Look, we are talking about a retail perspective here. It's because the end consumer needs to know about that particular stone. So that dictation can only be done through like having a trusted certification agency like IGI or GIA or someone like that, because they've already built trust with the consumers. They've marketed themselves well. If I tomorrow just want to start certifying it, there is no basis to it.
Yes.
The consumer might not know who Greenlab is. So thinking it from a retail perspective, that's the reason why these agencies, after years of marketing and positioning themselves, the place they are at and the trust they have built is very important.
Right. Then one question is regarding the natural diamond. In terms of prices, how much prices would have been fallen, say, in 1 to 3 carat and more than 3 carat in last 2 years? So, Mr. Rahil, can you take this up?
I think probably Mr. Rajagopalan ji would be better judge for the 1 carat above category of goods. But you're saying in the last 12 months?
Yes, 12 months, yes.
So I don't know, don't hold me to my word, but I'm presuming anywhere around 10 to 15% probably. I think Rajagopalan ji, you're a better judge because you guys are a much bigger player than I am in that area of goods.
Larger size diamonds prices have gone down substantially. The average price that is indicated in DJEPC is slightly more than that, around 2 or 3% more than that will be in higher sizes, it will be there. But more or less, the reduction in prices are mainly for the large size diamonds. Small size diamonds category, there is not that much of a reduction. As such, the prices were low and there was not much. But it is only in the 1 carat, 2 carat, and above category there was. And in very large size diamonds, takers are very few. Earlier, we cut a say 22 carat diamond. We had a 22 carat finished goods, and we had to wait for 3 months or 2 months for that material to go away. But now it takes a longer time for that to go. So people are, bargaining. So the prices are have come down. There will be at least 3 to 4% more than what the DJPC is average. It will be more than that. I don't have the data on hand presently.
Right. Right. Okay.
This is what I feel.
Yes. Yes. Another question from audience is in terms of what for a lab grown space, how can manufacturer differentiate if all the players are using the same technology? Secondly, do we see any immediate threat of any new technology coming up in the lab grown space? So, Mr. Smith.
Yeah. So when it comes to the lab grown technology, let's speak about CBD in particular. There's a misconception that this technology is improving, hence the cost is coming down, and like I said, we've made it a little more efficient. We have bettered the colors a little bit, with experience, with trial and error, R&D. But the logic behind the technology still remains the same. This is a similar kind of machine that was also there in 2005. Because we've spoken to all the research team and the people that we have been close to, our senior team. They have been growing diamonds since 2005. Using the same technology. So I don't see this because it's more popular now. People assume that this technology is very easily created and something new can also come up. But we have been like talking to the world about this. It's not an immediate threat. Definitely not an immediate threat. And in terms of what was the second question, sir?
So any new technology emerging in the lab grown space which can replace CVD?
No, so yeah, I think I answered that it's not
Okay.
it's not an immediate threat, and everyone having a similar machine is also kind of a myth. We have the basic understanding of the technology is same, but probably one of my growers or my technician might not be able to operate someone else's machine. There are a few changes that people make from factory to factory, especially in terms of color, tinge. Everything matters in this industry as well. And every grower will have that little differentiation. They still do have it.
Okay. So basically, in terms of quality of goods produced, that would be a differentiating factor between the different growers.
Color can be determined by the growing, and the clarity and cut all depends on your planning, like it does in your natural diamond. So I can plan everything about VVS if I want to, but that's on me to decide what my customers want. Do they want a VS, SI? So every company will operate that separately.
Okay. But do we see it's more of a marketing push when we talk about competition between the players, or do we see quality play also here?
No, there is a quality play, definitely a quality play. So not only of course, the cut and clarity is a very important part. Like some people will have only hot and narrow cuts, and some people don't mind, they're pulling weight. And so I'm not saying one is right, one is wrong. They're all going to build their niches and represent themselves in the market. And I think there is space for both. And in terms of growing quality, the rough quality is also different from grower to grower, and we can see that.
I think for paucity of time, we will take one last question from the audience. Just a minute. So the last question is in terms of marketing efforts undertaken by miners. So, Mr. Rajagopalan, can you highlight more on that front? How do you see the marketing efforts, whether it's increased or decreased by the miners?
Miners have been, as you have yourself stated, miners have been trying to help in releasing advertisements and all these things. See, so far as end consumers, to generate interest in natural diamonds, they have to do something. It is the retailers and the miners, they have to do something about it. So far as manufacturers, the cut and diamond manufacturers are concerned, they are selling to only wholesalers. So the link between wholesalers and the retailers, second or third line, but it is not possible for these people to monitor and take corrective steps and ensure that the demand increases. There has to be an agency. That is why our people are telling that, Jide, we are telling the miners, you do something about it, because it is your responsibility to see that the end consumer gets the diamond. So they are also realizing something is being done about it. So far as marketing is concerned, apart from that, I don't see any concerted move that has been taking place here in India or at any other place, apart from some advertisements that are being released. All said and done, it is the money in the pocket of a consumer that determines what one has to pay.
Right, right.
Because people know, in India, everybody knows natural diamond. They are interested in natural diamond. So if they have money, they buy. If they don't have money, they will go for the alternatives. And that is true, I think, in America also. They were telling, once upon a time, when these lab diamonds were coming into the picture, they were telling that no, 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 a American boy will like to present only a natural diamond ring to his lady love. So I do not know, all these American boys are presenting to the lady loves this lab grown diamond rings now. Very few people are, they said that there will not be any impact on this area. So these are all guessworks, and you also guess, I also guess. Whose guess comes true, nobody knows. The point is this, we have to somehow survive or be stable in the market. For that, the community wise, it has to undertake something. So I am not sure that whether advertisement is going to help in this. It is ultimately, it is, there are examples of natural pearls and lab grown pearls, pearls, cultured pearls. Sir, what
I would like to add something, please.
Yeah, yes,
yeah,
Mr.
please, please. I would like invite your views on this, because I am only a sort of a table researcher. You are there on the spot. You can say better.
No, no. So to answer your question, I think that a lot of credit is due to the mining community with regards to the amount of effort. And not only this tough time, I think we forget that they have done a lot of marketing campaigns in the past as well. I'm sure a lot of the viewers are aware, or even if you're not, I think, for example, De Beers has collaborated with the top retailers of the three largest countries consuming diamonds. They have collaborated with Signet, they have collaborated with Titan in India, and with, I think, Chow Tai Fook in China for the marketing penetration. So, a lot of credit is due because, today, yes, that first level of push is coming from them. There is a genuine interest for them to push the diamond dream through, and to make sure that that ignition remains on and on through and through. They do spend a lot of money behind this, but as Smith mentioned, that see, at the end of the day, it is equally responsible for the retail community to also market as much for both, whether it is for lab grown or for natural diamonds alike. The final message does go across from the retailer to the consumer. To those consumers who do not know who a De Beers is, they eventually will depend on the retailer to communicate the final message towards them. So I think that spending has to happen across the pipeline. We see that GJPC also does a lot of marketing initiatives. We see the NDC, the National Diamond Council, also do a lot of initiatives for that. See, from a marketing standpoint, it is never going to be enough. It is never going to be enough, right? It is always marketing is an ocean. It's an endless, place where you can keep pouring in money. But I think miners understand how strategically to do it, and I think I have the confidence that that message they understand in the different regions that they're marketing and collaborating with, it's not the same approach either. They are having very different marketing strategic moves with these different players, besides their own generic marketing Divyas is doing themselves. So I think they do owe that gratitude, especially from the midstream, that they are contributing towards a marketing initiative. That's what my thought process around it is. So yeah, but I mean, it's consistency again, even in formal marketing, awareness, disclaimers, making sure that customers don't get confused between the two products. All these things will play a more critical role in time to come in the marketing efforts made by whoever does it, whether it's industry bodies, whether it is miners or retailers alike. It's a collaborative effort.
Thank you, Raji, for your inputs.
I agree.
So I think we have come to a close of session. To sum up, I think we have got a very valuable insight from all of our three esteemed panelists. We see that after a sharp decline, this decline can be arrested with there is an improvement in the overall income of the diamond consuming nations. India growing as a potential market, though it has a limited potential to grow, but yes, from the level where we are at, it has a potential to grow with the organized space coming in. As far as LGD is concerned, we have established that the further correction is limited in terms of prices are concerned. Players are reached to near cost plus basis model. Even the further cost efficient measurement would be limited. But yes, the marketing efforts are being done at a various level. It is a joint effort ultimately which will see the light at the end of the tunnel. With this, I will hand over to Mamta for the closing.
Thank you, Akhil, for moderating the session, and Ujjwal and Manohar for your presentation. Once again, thanking all our guest speakers for their insightful views. It was a privilege to host you. And lastly, thank you to all the participants for taking the time out and being a part of this CareEdge webinar. For any further queries, feedback, or suggestions, please write to us in the feedback mail. Goodbye for now. Requesting the tech team to kindly log off.